Bloomberg's Paul Allen takes a look at why Australians are keeping such a tight grip on their wallets.
Australia's consumers are barely worthy of the name right now. Interest rates on mortgages have been rising as ultra-low fixed-term rates roll off. Inflation's running at 3.8%, still outside the Reserve Bank's 2 to 3% target range. Any spending that is going on is mostly on the bare essentials.
It's no respite, mate. Your salaries aren't growing with cost of living.
We're basically working just to pay off our bills as opposed to really spending time with our kids.
I'm currently working about 4 jobs right now.
It was only a rise in government spending that stopped Australia's GDP from contracting in the June quarter, with growth accelerating by a mere 0.2%.
The main story in these figures is consumption. Consumption went backwards and discretionary spending fell substantially.
The weak growth reduces the likelihood of any further tightening from the RBA, but with inflation still not back to target, relief in the form of a rate cut for Australia may still be months away. Paul Allen, Bloomberg, Sydney.
Well, next guest runs Wesfarmers. This is one of Australia's largest listed companies and one of its largest private employers and its largest non-food retail group. Brands include the likes of hardware chain Bunnings, the budget-friendly Target and Kmart. Joining us now is Wesfarmers Managing Director and CEO Rob Scott. Rob, really great to have you with us, and of course, such pertinent timing in terms of these cost of living and interest rate woes that are confounding lots of households. I wanted to start by asking you, what's your gauge of the Australian consumer at the moment? How do you feel in terms of your business, how that sentiment is being expressed?
Well, there's certainly a degree of caution within Australian households and how they're spending their money. We are seeing a real focus on value, particularly from younger families that have mortgages, are facing a lot of challenges with higher costs of living. So what we're doing in our businesses like Bunnings, Kmart, Officeworks, that are renowned for everyday low prices, we are really trying to double down now to keep our prices really low. And that has served us quite well in terms of maintaining some sales momentum during difficult trading environments.
You just mentioned the sort of fight to keep prices low. How is that front when it comes to your costs and whether you're able to continue to provide those low prices, particularly in an environment where we're seeing, online businesses like Temu and Shein taking such a big chunk of consumer attention and spending?
Well, one of the challenges that all Australian businesses are facing at the moment is cost of doing business pressure. So we've seen quite significant increases in wage costs, in power costs, domestic transport, utilities, and accommodation. Rents are also going up. So all of these factors are pushing up the cost of doing business, which is putting more pressure on domestic costs. So what we're doing in our businesses, we've invested heavily in a lot of technology to try and drive efficiency within our businesses. So, for example, if you look at our Kmart stores, we're now using RFID technology to better manage our stock, improving availability, making it easier for our team to manage our inventories in store. They are just one of many examples of ways in which we're trying to drive efficiency, drive productivity in order to keep our costs down so we can then keep our prices down.
You talk about Kmart, but you already had a very strong growth year for fiscal 2024. Can you continue that level of growth, and what brands will drive that?
Well, we're really determined to keep our prices low at a time when households are really looking for value. And Kmart is well regarded for having not only everyday low prices, but also having some really innovative products that are now providing accessibility to some products that simply were not available outside of specialist stores that had much higher price points, such as health, beauty, cosmetics, youth fashion, a lot of accessories for the home. All of these things are really resonating with customers. So I think that combination of keeping our prices low, but also leveraging some of our unique design capabilities to bring new products to market, that's what we're really focusing on in the current environment.
And Rob, to Heidi's earlier point, how do you see competition with Chinese sites like Shein and Temu, not to mention Amazon as well, I guess?
Well, I think it's a good point that you make. We have a very competitive retail environment in Australia, and sometimes I think people just focus on the Australian competitors, but we are up against some of the largest, most formidable retail competitors in the world. And you mentioned some of the large Chinese e-commerce providers, you mentioned Amazon, and we are having to fight really hard to ensure that our products and our value are very competitive. And within Wesfarmers, we've invested significantly in our e-commerce capabilities. We are offering free online delivery across Australia through our OnePass membership program, which is a subscription program. We've seen really strong growth of e-commerce within Kmart, nearly 20% growth. So we are getting some good traction there, but we are fighting a fight against those big international companies that you mentioned.
We just saw in the latest consumer confidence numbers an indication that households perhaps have moved on a little bit from cost of living pressures, which may have alleviated slightly, and interest rates to kind of more of a longer term concern over the direction of the economy and employment as well. Are you seeing that through, the risks to your business, and do you feel like there's been policy missteps? Do you think that the RBA should have started easing by now? Would that take the pressure off the consumer?
Well, I think from an RBA point of view, I think the RBA is very mindful of the fact that inflation is still running quite high. So I think they are adopting a very responsible and prudent approach to trying to get inflation under control before we see decreases in interest rates. I think that there are many things that can be done on the policy side, certainly around the supply side issues, to help improve housing affordability. We need over 1 million new homes in Australia, and there are many supply-side challenges that are preventing people from investing in new homes and undertaking renovations. That goes to availability of skilled labour, some of the challenges with planning approvals. These are all issues that I think could be enhanced and improved with good policy, and that ultimately will improve the inflationary pressures, improve the housing affordability, and improve the economy over time.
You mentioned the building sector weakness, and I do wonder, has that played through to the business at Bunnings? How are you seeing that sort of split between retail and commercial, and are you seeing diversification efforts in some of these other groups perhaps helping alleviate that?
Well, I think we've benefited in Bunnings because we have a very diverse set of products and a very diverse set of customers. And at the moment, our DIY consumer spending is holding up reasonably well, but we've brought a lot of value to our offer, and we've also expanded our product range in some new areas. We are seeing softness in residential construction. That only accounts for about 10% of our overall business. But I must admit, it is quite frustrating because we're seeing very strong demand on the renovation side and the housing side, but we are facing these skill shortages that I mentioned with trades, and a lot of builders are still lacking the confidence to lock in fixed price contracts. And in an inflationary environment, households and investors want to get the confidence of locking in a price if they're going to do a renovation or build a new home. So these are some of the challenges that we're facing with residential construction, which are also putting upward pressure on rents and housing prices.
Rob, you're also, of course, one of Australia's largest employers and private employers. What's your gauge of the labour market at the moment, both from the costs and wages perspective, but also just the availability of staffing, given there's some pressure that perhaps, immigration and international students might have to be pulled back?
Well, I'd say at a macro level, unemployment is still fairly low in Australia, and that is a real positive for the economy, and it is positive if people want work, they basically have work at the moment. But we are seeing skill shortages in some key areas. To give you an example, as we are developing our state-of-the-art lithium refinery in Western Australia, we've had to fly labour in from the east coast of Australia just to meet some fairly basic roles around welders and electrical contractors. So that goes to show that there are still some pretty significant labour shortages in key areas that are critical to Australia's future and the future of investment here. But I think we need to be mindful that many of our industries in Australia are internationally competitive. We have seen some softness in global commodity prices. We have seen some projects start to slow down in the areas of lithium and other value-added production, certainly here in Western Australia. So I think we do need to be mindful that we are well positioned to attract the investment, that we have the skills that are necessary to drive this value-added investment, or things could turn if we're not careful.
As a CEO and, of course, managing such a significant workforce, what are your thoughts on the new right to disconnect laws?
Well, look, I think it's a fairly small change in the scheme of things. And as we've said along the way, in Wesfarmers, our businesses have very respectful relationships with our teams. Our teams want our businesses to be really successful. So we already have a very respectful arrangement if we need to contact a team member outside of office hours. So the regulation that we're now faced with, I see it as largely unnecessary. It probably just goes to the fact that we now have hundreds and hundreds of new pages of workplace relations regulations, many of which don't really do much about improving wages or conditions for team members, but they add additional cost and compliance that businesses must address. So, look, it is a shame that I'd much rather see some of the focus around industrial relations focus on areas that can drive a real win-win arrangement between businesses and their team members. I would love to pay our team members more, and we have a great track record at Wesfarmers paying our teams more as our businesses are more successful. So that's what we're really focused on within our businesses. It would just be good to see some of the regulation be more constructive around driving that win-win outcome.